Okay, everybody, this is part 2 of a discussion Bob and I had about some of the great risk you take if you use a bank as your primary place to store your capital. The first YouTube video we did was called Why We Don't Like Storing Capital in Banks. This is a continuation. This discussion lasted over 40 minutes, so it really wasn't appropriate for a YouTube video, so we broke it up. So like I said, you probably want to watch the previous YouTube before you watch this one, but just as a quick reminder, what we're looking for when we're looking for a place to store our capital, this place has to beat inflation. There has to be tax advantages. We want minimal government regulation and oversight. It needs to be anti-fragile, not subject to market volatility, and a place to save and invest, not speculate. So I'm going to take it back to me and Bob's discussion. We're going to talk about why we think whole life insurance is the one place that meets all these criteria and why it's a superior place to store your capital and kind of use as a base camp for all your financial transactions.
So that begs a question. Where do we store it?
Yep, like we said, it's on our mattress. Well, in our opinions, privatized banking via whole life insurance is the absolute best place to store your capital.
And everybody, when people talk to us about it, when we heard it on podcast, we heard this from Mike Dillard and Atlas Wealth, that I remember we both listened to the same podcast and it took us 6 months to ask. We're like, life insurance, that is so boring.
Yeah, life insurance, it's boring. It's not at all sexy, and people are like, I'm going to die. Who cares anyways? But the point here is that this is not life insurance. This is basically creating your own bank, and you're using life insurance as the financial instrument to do that. You know, if you look at all the original reasons why people use a bank and want a bank, we can accomplish those same things with life insurance, but without all the headaches that we just talked about previously. So these are some of the reasons you should use privatized banking and whole life insurance.
And here's a quick interjection. You know, our big paradigm shift was Rich Dad, Poor Dad. And he talked about to create wealth, you don't work for wealth, and you need to have the tax advantages that a business, bank, or corporation has. So we agreed with that, and then we discovered life insurance. And guess who else uses life insurance? Huge corporations and huge banks for the tax advantages and for the liquidity.
Yeah.
So it wasn't a big stretch for us to say, these guys are doing it. What? Yeah. Is there a consumer product that allows us to do it?
Yeah, look it up yourself, but I mean,
look up Boley.
Boley.
Bravo. What's the
Bravo, Oscar, Lima, India.
Are you joint ops fans right there?
Jimmy's not an Air Force guy, so he doesn't have the phonetic alphabet down as well as I do. But there's literally billions of dollars of banks' money is invested in life insurance, and they actually have huge policies on all their top employees too. So if it's good enough for the
and we'll do
banks,
another video on how they use it because it's ingenious.
Yeah.
So here we're gonna list 14 reasons why we like this.
I think we added our own 15th too, and this came from a book, The Perpetual Wealth System. Great book. Check it out for yourselves. It'll kind of dive deep on some of these topics.
So this is my favorite. The principle never fluctuates. If you put your money into the market, a qualified plan, you're buying stock. It fluctuates every day.
Yeah. So let's say you buy $50,000 of, Amazon stock just for.
And we're going to do another video why we hate qualified plans.
Yeah. So that stock amount, first of all, when you put $50,000 in, you're going to have fees that come right off the top. But then after that, it's going to fluctuate each and every day. That is not a safe place to store your capital. One, it's not really secured by anything.
Well, you're not storing your capital. If you buy a stock, you're speculating.
Yeah, for sure.
You're speculating that's going to go up in price.
Yeah.
And it's not cash flow because they don't pay high enough dividends because they know everybody in the market is speculating.
Yeah. Well, we have a whole nother video, I think, on why Wall Street's a sham.
A privately traded company. Could you imagine a publicly traded company that paid out dividends like a single-family residence?
Oh, it doesn't exist. No, yeah, not at all. So, number 2, contractually guarantee growth of your account. What does that mean, Jimmy?
When you pay your premiums, the life insurance company guarantees X amount of interest they'll pay you every year. And there's still a dividend at the end of the year if they didn't have many people die. If they have extra money at the end of the year, it goes to you, because we use mutual. What's the right phrase?
Yeah, so there's a difference
We don't
here
use
between
publicly traded life insurance companies.
Yeah. So when most people think about life insurance, there's a lot of financial experts out there that have told you to buy term, and basically, you're buying a
You're renting the death benefit.
yeah, right. So let's say
Another
I pay,
YouTube video.
I pay.
Where are we at on time on this one? We're gonna have to start ripping through
Well,
things, and these details we'll do other videos.
All right, so we'll break down exactly how this whole life insurance is able to be structured to create your own personal bank. Right now, we're just going to hit the broad stroke bullet points on why you should do it.
And we're going to do a video why this applies so well to real estate investors who understand shorting the dollar, getting inflation on your side, and several other real estate advantages.
Yeah, when you can combine this with private lending, it's pretty crazy. So anyways, I believe we are on number 3 there.
Dividends paid to policyholders are not taxable. In a qualified plan, you're going to get taxed on dividends. It's going to be tax deferred.
Okay, what do you mean by qualified plan for folks that don't know?
IRAs, 401ks.
Got it. All right, cool.
So all the dividends get taxed at some point, either upfront or deferred. With life insurance, the dividends are never taxed.
Okay, so your money's growing tax-free, number 4, and growing tax-free and compounding tax-free. That's where the real power is.
Not deferred, tax-free forever. That is
I know, yeah.
Incredible.
Insane.
This is my favorite: access to money at any age, for any reason, without penalty. We know how to get money from a bank, but we own over 100 properties. It took a long time to understand the game and do it quickly.
Yeah.
So I've taken 2 policy loans so far. All I do is send an email, and 3 days later, the money's in my account.
Okay, so it's easy to get our money, right? What next?
Yeah. Total control of what you use your money for, investment and personal. A qualified plan, you cannot touch the money till you're 59.
Yeah, and you can only use it for investment purposes.
If you're an investor or an entrepreneur of any type, there's such a huge opportunity cost between today and when you're 59 and the money you could make. I don't even want to get into how huge of an opportunity cost it is.
Yeah, we'll probably break that down for you in another video.
And in black swan events, the reason people get crushed is because of liquidity. They may have money. It might be in a house. It might be in gold. It might be in a business, but they don't have liquid cash.
Yeah.
And so it's an issue of time, not the fact that their business is insolvent.
Yeah, and the cool thing about these whole life insurance policies is because the life insurance company has the goal of providing a death benefit, they're not allowed to do fractional reserve lending and all that kind of sort of stuff. They have to be much more conservative than banks. And so they're really not at risk to a lot of your black swan, gray swan scenarios that we talked about earlier.
And when you discover this concept, it's going to take you 90 days to really flush out everywhere you can apply this to your life. I mean, we started, wow, what a great social liquidity for a real estate company. And I took it to, I won't save money in any bank.
Yeah.
All my family's personal savings is in a policy now.
Yeah.
We also forgot to mention the average rate of return is a 4%.
4%, yeah. And that's average, folks. There's some that are they're even higher than that. So you're beating inflation. This is also called the infinite banking concept as well, for those who want to check it out.
And we'll show you plenty of books to read at the end of this webinar. Ability to put large sums of money, unlike a government plan. I think you can put $14,000 a year
into a government plan. That's it.
I have a family of 6. $14,000 is chump change. It's nothing.
Yeah, if you're pulling any sort of real money down, you got to be able to put more than 14 G's into an account into a year. When done properly, all growth and dividends can be taken out tax-free for life. That's crazy. What if you tried to pull money out of your 401k or your IRA?
Big penalty.
Big penalty. That's not cool.
There's not a penalty to even shift your IRA or 401k into a self-directed, but there are fees.
Yeah.
And it was, so when I left my job and put it into a self-directed IRA, it was a pain.
Yeah, but it's
much more cumbersome than when I get a loan for my life insurance.
But it's still a self-directed IRA. You have to put it into an investment vehicle. You can't use it for personal uses.
Nope. It's not liquid.
Yeah. All right. You have the ability to use your account to recapture your lost principal and interest payments. What does that mean, Jimmy?
So what 13 means is recapture lost principal and interest payments is when I pay for my house or my car, we'll do a whole nother YouTube video on being able to control your principal and what a huge deal that is. I didn't understand this until like day 60 of even understanding the concept of controlling your principal. We're not even going to get into it right now.
Basically, the more money you can put back in your control, the better. Right?
It's a whole nother at least 20-minute YouTube video on controlling your principal.
Okay.
Originally, I thought the tax advantages and beating inflation was the big thing about this, but controlling a principal on a loan is unreal and being able to arbitrage that.
Yeah. So your account is judgment and creditor proof forever. And I believe there's a story about Enron here that you can tell folks, right, Jimmy?
All you people are furious at Bernie Madoff. He's still a millionaire because he had cash value in his life. Well, he's dead, but he had cash value in his life insurance, so he had plenty of cash to live extravagantly, even after the government had taken all of his other assets.
Nobody can touch this money. Literally nobody. I mean, the guys from Enron, Madoff.
And they're scumbags, and we're not saying if you're a scumbag, buy these policies so you're protected.
Yeah.
We're saying...
But you know, life happens, shit happens. I mean, what if your wife gets into a car accident and you get sued, right? You know, you want your investment savings, your retirement savings, your potential legacy to your children to be subject to those type of risks. I sure don't.
And that is state to state. So
yeah,
that's once you're further down the rabbit hole.
Ask a real expert, not Jimmy and Bob.
So look at 11 and 15. They look the same, but they're not. Funds pass tax-free to your desired heirs.
That means any money you've saved up and you've put into your policy into the first place, right? So, you know,
you cannot do that with a qualified plan.
Yeah, and in the United States, there's what they call an estate tax, basically a death tax. When you die, you're gonna have to take taxes on the investment money you have.
And this is how a lot of wealthy families get crushed if their money is in land or farmland.
Yeah.
There's been plenty of examples of farmers trying to pass their farms to their heirs, but the heirs don't have the liquid cash to pay the property and the death tax on it.
Yeah, pay Uncle Sam. He wants his bite every step of the way. Okay, so what's the difference between that and number 15? Well, basically, let's say over the years you've ended up putting, $300,000, just for an example, into your policy. So number 11 means when that $300,000 passes over to your heirs, it's not going to be taxed. Well, in addition to that $300,000 you put in, you're going to have a death benefit, because that's the whole point of this, right? Or the whole structure of this. This is a whole life insurance policy. So the $300,000 you've paid in to essentially be a shareholder of the life insurance company, they've contractually agreed to a death benefit that will be much larger than that amount. And I don't have the exact numbers of what that is, but let's just say $1 million.
Yeah, illustrations.
Right? Let's just say you have a million.
Let's talk about us. We put $30,000 into one policy, and each of our families have $1.2 million in death benefit for us.
Yeah.
When we put $7,000 into the base premium. So $7,000. If we pass the day after that, our family gets 1.2.
Yeah. And technically, it's a quarter of that, whatever.
Yeah. Another YouTube video.
But essentially, all the money you've paid into this, you're going to have a death benefit when you die above and beyond that amount. And, that's just like a bonus, right? After you die is going to be passed on to your family or whoever you choose, your mistress, tax-free. Right? That's insane. Absolutely insane. And it's insane that nobody else is talking about these things.
Then let's go guaranteed access and funds to borrow. Even our best banking friend, even our most reliable bank, how much paperwork do we have to do to get access to capital?
Oh, it's insane.
It's absolutely at least a 60-day process.
Yeah.
And we consider ourselves fast at this.
Yeah.
Even if we get a line of credit, because our portfolio right now, we're going to put $100,000 of principal back to the banks, and we would like to control the principal, so we're going to have to take a line of credit to get access to it. That's going to be a long, tedious process.
Yeah. So essentially what you can do here is, let's say you put $30,000 into your life insurance policy, and then you want to go buy a $30,000 car. You can borrow from your life insurance policy and set yourself up on a payment plan, right? But then what if something bad happens, you lose your job, or your business takes a downturn for a month. It's not a big deal if you don't pay back your life insurance policy that 1 month. It's extremely flexible. You can adjust the payment periods based upon what's going on in your life, but you can't do that with a bank. If you miss one payment with your bank, you're getting nasty letters in the mail.
Well, you're not just getting nasty letters. They're going to crush your credit report, and then you can't get money from anyone else.
They
spread your dirty laundry.
It's just a downward spiral.
And so 13 is incredible. The problem with term insurance is you buy your term insurance, right?
Okay.
And then let's say your term expires, and then you have to do another physical. They have to examine you again. And let's say you have cancer that day.
Yeah.
Boom, you're done. You are not insurable.
Yeah.
The reason the premiums are more expensive with whole is because they're guaranteeing to insure you your whole life. They're taking greater risk. So you're going to pay a higher premium.
No, this exact scenario happened with both my parents. They had term and had health issues develop and were no longer able to get the same policy they got in 10, 20 years ago.
Term is always going to get more expensive.
Always more expensive. And you have the chance to
You're not going to get younger every year. You could get healthier. My favorite YouTube video is going to be when we talk about how real estate and this private lending system, they're peas in a pod.
This one's pretty good. This isn't going to be your favorite? I like this so far.
When we rip apart qualified plans, that's going to be my favorite. Because I want to defeat the myth that the only place you can invest is Wall Street. It infuriates me. But that's neither here nor there. And this video is getting really long.
All right, so who is privatized banking for? Well, this is for people who want control of their capital, people who are really tired of the too big to fail banking system and who want to protect themselves from bail-ins. And it's also, like we talked about a little bit earlier, this is privatized banking with whole life insurance. It is performing the exact same functions that banks should be, but without all the gray swan risks.
So for my Austrian economics friends and libertarians, but we may or may not be that. We are real estate investors. But in a free market, in a place where you want to store capital, these life insurance policies have replaced the function of what a bank does without the risk. That's another huge concept in the black swan, is that your average American takes huge risk, huge systemic, did you like that word? Systemic risk.
That's a big one.
Yeah. Huge systemic risk for minimal return. What is the average? If you invest strictly in the S&P, what's the average return?
I have no idea
we hate average returns because that's a bullshit term.
And we're not average. We're above average.
No, absolutely correct. So there's no reason to take all the risk that we listed in the gray swan slide for such a minimal reward. You're not even beating inflation.
Yeah. Like we touched on earlier, these life insurance companies cannot take the same risk because they are going to be providing a death benefit. They
can't take the same risk because they're not publicly traded. They don't have Wall Street to answer to.
Yeah, and they can't be as loose with the money. They got to be much smarter, and they look at a much longer time horizon. These life insurance companies have been around for 200 plus years. These are some of the oldest financial instruments in existence. Just check out Google for yourself. All right, some further resources for you. Mises.org, some good books, Economics in One Lesson, Monetary History of the United States by Murray Rothbard, The Case Against the Fed, also by Murray Rothbard. And Jimmy, you're a big fan of the Laura Murphy report.
I love the Laura Murphy guys. Their website explains things simply, much worse than us mumbling through it. Once again, we're just real estate investors.
Much better than us mumbling through it.
Yeah. Bob Murphy, he's my favorite Austrian economist.
He's a smart dude.
Yeah, he can break it down very simply to meatheads like us, and then we can go and make investment decisions. And if you want to look at their podcast, the Laura Murphy podcast, they discuss bail-ins for about a half an hour. And if you are not pissed off by the time you listen to that podcast,
you probably weren't paying attention.
You probably don't need to invest in joint-off properties.
All right, some other books for you for people who like to read. If not, you can just keep watching our YouTube videos. But Becoming Your Own Banker by Nelson Nash, fantastic book.
We both got this book on a Friday. We came into work Monday pissed off. Like, why didn't anyone ever explain this to us?
Yeah, you guys are very
lucky.
This should
be like kindergarten material.
Yeah. But great book. It's a super easy read. I mean, it's like 70, 100 pages, something like that.
I read it in like 2 hours.
Yeah. Easy read. Perpetual Wisdom.
And we have met Nelson Nash, and he's a great guy.
Yeah.
We had dinner with him. We had a great time with him.
Yeah, he's got some really interesting stories. Anyways, Perpetual Wealth System by John Jameson. That's a good one to check out. And Laura Murphy, they've created this book, How Privatized Banking Really Works.
And so here's how it worked for us. The Nelson Nash book lit a fire under us, and then we went to Lauren Murphy, and they broke it down for us and kind of validated it.
Yeah, so hopefully this YouTube video has lit a fire under you, and you guys can get all the details from all these other guys who are much smarter than us. All right, you want to find out more about Joint Ops Properties? Go to jointopsproperties.com. Email us at jointopsproperties@gmail.com. You can give Jimmy a call on his personal cell phone.
I'll talk about this 24 hours a day. I love it.
Yeah. Personal cell phone number is listed right there. I don't really want to give out my personal number on
Bob
the internet.
Is the thinker of this duo, so he needs his time to think and figure things out, where I just like popping off.
Yeah, so all right, folks, that's it for today. Have a good one.